Hello and welcome. You tune into Market Cafe with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next 1 hour, we'll take you through what transpired in the global markets and how is it going to impact the D Street before the D Street starts trading. The biggest news for the day, of course, has been Donald Trump and his tariff saga. Donald Trump has once again rejigged his trade tariffs. The US president has signed a sweeping executive order hiking duties across the board, with a sharp 40% penalty on all the transshipped goods, accusing some countries of dodging prior levies. Nations are not specifically listed in the latest directive will now face an added 10% duty as the White House pursues what it calls the reciprocal trade terms. Now, the updated tariffs are ranging from 10% to a 41% kick in 7 days from the order's signing, with limited expectations. Canada is not spared either. Trump has raised duties on Canadian imports from a 25% to a 35% starting today, excluding products protected under the USMCA deal. Now, the order marks a continuation of Trump's deadline trade stance, with countries still in talks on trade or security pacts subject to revised rates until the final deal has been struck. And while during a press briefing, then the White House press secretary Carolina Leavitt discussed details of the letters that will be sent out on the tariffs. Let's go across and take a look.
There's a lot of countries that I know have reached out. I believe it's upwards of 200 countries around the world have reached out to the trade and tariff team. Of course, as I said previously and the president said, we're going to prioritize our key trading partners, which we have done. Like I said, of the 18, 2/3 of those we have cut these tailor-made deals with. But I do know that the trade team has been working around the clock to try to be in correspondence with as many countries as possible. But if they haven't heard from us yet, they will in the form of a letter or an executive order by midnight tonight.
All right, so that's the latest word coming from the US. But let's also take a look at what Commerce Minister Piyush Goyal said in Rajya Sabha yesterday, defending India's stance on agriculture and the MSME sector.
Government attaches the utmost importance to protecting and promoting the welfare of our farmers, workers, entrepreneurs, exporters, MSMEs, and all sections of industry. We will take all necessary steps to secure and advance our national interest.
And while Donald Trump has also issued a bold ultimatum to Big Pharma, slash US drug prices or face consequences. In letters to 17 major drug makers, including Pfizer, Eli Lilly, and Novo Nordisk, Trump demanded immediate mediated prices cuts and insisted that the future U.S. drug launches match the lowest global rates. He also pushed for direct-to-consumer sales to bypass insurers and urged firms to repatriate overseas profits to offset domestic costs. Trump warned the failure to comply within 60 days would trigger aggressive federal action. The market reaction was swift. Eli Lilly shares dipped while others like AbbVie pared earlier gains.
All right, so that's about tariffs on pharma. But moving on, let's also take stock of how the U.S. markets fared overnight. Now, the U.S. markets did close lower yesterday in a choppy session, with the S&P 500 falling about 0.4%, which is a third straight loss. That's the consecutive loss. It's the third day of loss coming for S&P 500. This was a strong earnings from Microsoft and Meta. They failed to lift sentiment on Wall Street. The Dow, that slid about 300 points, while the Nasdaq, that closed flat after touching intraday highs. Focus now shifts to July jobs report and Trump's tariff deadline, as we have been talking about, with fresh duties of 10% to 41% announced, including 40% on transshipped goods. But despite the volatility, all three indexes have closed July in the green, led by a 3.7% monthly gain for the Nasdaq. But for the week, the S&P 500 is down about 0.8% and the Dow is off 1.7%. So that's how the market setup is looking like, Ankita. But how are things on the crude front?
All right. So moving on then, that's how exactly the U.S. market panned out. A sharp cut coming in, especially on the as far as Dow Jones is concerned. There is uncertainty that's weighing around the globe as far as tariff volatility is concerned, and that's weighing heavy on the markets as well as crude that is moving on the back of that. Now, Brent crude fell almost 1% on 6-week highs. Now, crude prices snapped their rally that they have been, we have been seeing a rally in crude. Now that has come off the rally. Oil prices fell as investors weighed the extension of an existing trade deal between US and Mexico, while a surprise build on US crude stocks on Wednesday also dragged on the prices. Now, as far as Brent crude is concerned, the futures declined 71 cents, which is 0.9% to close in at $72.5 a barrel. The WTI crude from September fell almost 74 cents or 1.06% to settle in at $69.26 a barrel. Both benchmarks have recorded a 1% gain. As of yesterday, they had recorded a gain of 1% in this week. Now, US President Donald Trump said that he and Mexican President have agreed to extended an existing trade deal between the two countries for the next 90 days and to continue talks over that period with the goal of signing a new deal. On the back of that, we did have a movement coming in on the oil, and as far as the markets also concerned, we did see some movement based on tariff coming in on the markets as well.
All right, so that's about the commodity space, but let's keep it with tariffs. Now, Sumita Karir, my colleague, has been tracking this story from the very beginning. She's now joining us with the latest on everything that Trump has announced overnight. Now, Sumita, just hours before the tariff deadline, another rejig in the rates. So what are you making of these new rates?
Absolutely, Kanishka. You mentioned about tracking from the very beginning. Well, it just seems that the story doesn't seem to be ending with one shocker and after another bombshell that keeps getting dropped from Donald Trump. Now we're beginning to understand from a White House readout that United States President Donald Trump has signed an executive order imposing reciprocal tariffs that range from 10% to 41% on over 70 countries. Now, this is something that he calls or describes as long-standing imbalances in trade practices that he's attempting to fix. Now, as far as India is concerned, well, India will face a 25% tariff under these new measures. There's no clarity whatsoever on what he announced a couple of hours back when he stated that there's going to be an additional levy on India's energy trade with Russia. There's no clarity on that. But coming back to the story on imposition of reciprocal tariffs, in fact, for Canada, this tariff percentage has been increased from 25% to 35%. And that is something that the administration describes as Canada's failure to act on the illicit drug crisis. That's what essentially it calls, and which is why it's retaliating against Canada for those moves that have been made. But alongside Canada, well, there are other countries as well on whom tariffs are as high as 41%. For example, on Syria, 40% tariff on Laos, Myanmar. Then, of course, as far as the 25% tariff range is concerned, well, India has been combined with Brunei, Kazakhstan, Tunisia, on whom there is a 25% tariff. But let's talk about countries in India's neighborhood, because that is going to be concerning us the most, given the fact that India for the longest time has taken advantage of the China Plus One policy. So 19% tariff is something that's been imposed on Pakistan, Malaysia, Indonesia, Cambodia, Philippines, and Thailand. So definitely we'll have to see how soon this tariff rate on India can be reversed, can be perhaps revised, given the fact that both sides are still engaged in negotiations.
Thank you so much for joining us with the details of the latest bomb on Trump tariff that he has dropped. But let's move on and take a look at how the markets fared yesterday after the 25% imposition of tariffs on India. Now, D Street gave up all its gains and ended the session at 24,768 on the back of Trump's tariff announcement on India. All the sectors ended in the red except for FMCG, which was buoyed by the strong earnings from HUL. Let's go across to my colleague Snehi to get a quick market check of the action from yesterday's session. Over to you, Snehi.
Well, yes, it was a very interesting expiry that we've seen in trade yesterday, because the kind of moves we've seen, we started with a gap down of about 150 points, recovered beautifully by the midday mark, but towards the last half an hour of trade, we were slightly lost all that recovery, but nonetheless, we've ended above the 24,750 mark. Remember, at one point of the day, we were higher than 24,850 as well, slightly receded from those levels, and we've managed to close with a cut of just 0.3%. So good moves coming in despite the tariff announcement. It was names like HUL, Geo Financial, Eternal, ITC, JSW Steel and Kotak Bank that managed to hold some gains for the Nifty. On the flip side, Adani Enterprises, Tata Steel, Dr. Reddy, Sun Pharma, Adani Ports, all of them were the big laggards and causing the pressure on the Nifty 50 index. Sensex too was lower by about 0.3%. Bank Nifty as well in tandem with these benchmarks. A 0.3% cut is what we've seen on the Nifty Bank as well. But from the broader end of the markets, the selling was, or rather the cuts were intensified further, because you had almost a 1% cut coming in from the Nifty mid-cap space and slightly more than that coming in from the Nifty small cap 100 group of stocks. In terms of sectors, you only had Nifty FMCG that was a real outperformer, almost a 1.5% uptick coming in on the back of robust set of numbers coming in from Imami, Dabur, HUL. ITC preview is very positive, so that stock also did very well yesterday. So those were some winning stocks from the FMCG space, but big losers were pharma, metal, energy, PSU banks, realty, IT, auto and Nifty Bank. So well, that was the market roundup yesterday. We gave up some of those gains that we collected over the course of the day. So all eyes are going to be on how our markets pan out in today's trade.
All right, thanks, Nehi, for getting us that market roundup from yesterday's action. But let's shift focus back to tariffs now. And to discuss that further, we are now joined by Peter Cardillo, who's the Chief Market Economist at Spartan Capital Securities LLC. Hi, Peter. Good morning. Thank you so much for joining us this morning. Now, of course, the big headline is the tariff deadline that's ending today. So what is your sense? Do you think there could be another extension? While Trump has said there is going to be no extension to this deadline, what is your sense? Do you think there could be another extension? And if not, how volatile do you think the coming weeks are going to be for the global markets?
Well, I think, President Trump has said that he will not extend them, but he did sign an executive order yesterday where some countries are facing another 10% hike, and that goes into effect on August the 7th. So the original 25% to 30% hike on most tariffs supposedly are going into effect today. And so, it's a question of whether or not he will change his mind over the next few days, but it appears that he's determined not to. And now, whether or not this is just tough talk, tough rhetoric, or whether or not it's going to be actual, we just have to wait and see. But, the markets are beginning now to get the tariff jitters all over again. We've had a nice run here in the stocks, and that was mostly due to a good earnings season. And most big companies have reported earnings, and in many cases have given a fairly good, rosy outlook. So that's the essence of this rally. But can we run into a brick wall now that we know that the earnings were not a problem? The answer to that is yes, I think we can. In fact, we saw a late sell-off last night, and that was due to the fact that the market is beginning to refocus on trade and what it will mean going forward.
Hi, Peter. Good morning to you. This is Ankita also joining in. I'll take a leaf from what you just mentioned. U.S. markets have been sitting at record highs, especially S&P and NASDAQ, rallying on the back of stellar set of earnings coming in, especially from the Magnificent Seven. But like you mentioned, we did see cuts coming in on the US markets because the market has now started to price in all the trade negatives. Now, perhaps wasn't this in the offing because of the heavy tariffs that Trump has been levying? There ought to be a certain impact on the inflation going ahead, because that you feel has not been priced in till now, because eventually it will start showing in the inflation numbers as well.
Yeah, well, if you look at we saw yesterday the PCE actually was a little bit higher than market consensus and our own consensus. And we're beginning to see the tariff inflation creep into the system. So with tariffs going higher, for instance, he raised tariffs on Canada from 25 to 35%, which on certain products that are excluded from the Mexico-Canada deal when President Trump was in office the first time. That's going to show up in inflation. So it takes us back to the fact that the Fed remains cautious, and as you know, they did not lower rates. And I think that is going to be a little sticky point for the markets. So entering a new month, which is generally a slow month for stocks, there's a good possibility that unless there's some sort of change of heart on the tariff situation, that it could be a bumpy ride.
That's right. All right, so let's see if that change of heart happens on the tariff front. Well, yes, all eyes on tariff and any inflation impact because of it going forward. Thank you, Peter. Thank you so much for joining us. On that note, we'll let you go. It was great chatting with you. All right, then let's shift focus back to the Indian markets as well. Now, Pulkit is now joining us to give us a roundup of today's F&O setup. Hi, Pulkit. Good morning.
Good morning, Kanishka. So if you look towards the F&O setup, let's start with the India VIX. The current value of India VIX is around 11.3, and in the previous session, like day before yesterday, it was around 11.2, so no big change. Now let's move towards the put call ratio changes. For Nifty, it is around 0.9, and for Bank Nifty, it is again around 0.9, that is 0.87. So both are in the comfortable position. No need to worry about it. Let's move towards the change in open interest for Nifty. Change in open interest for Nifty index futures. That is around 24% OI change, and the activity was short build-up. For highest open interest strike prices, for put it is around 24,000 and for call it is around 25,000. Now let's move towards the Bank Nifty. For index futures change in open interest, it is around 32%, and again the activity is around short build up only. For highest open interest strike price, the put is around 57,000 and the call is also at 57,000 only. For FI long position, the FI long position has reduced a lot and it is around 9.6%. We can consider it as a 10%, and for DI long position it is around 65.9%. So yeah, and since today is the new expiry, so no share is in F&O ban. So yeah, this was the setup around F&O.
That's how the F&O setup looks like. But let's talk about the stocks that are going to be in focus in today's trading session. For that, I'm joined by my colleague Shrishti Sharad and Ashesha, who will take us through all the stocks in news. But first up, let me come to you, Shrishti. Tell us what are the stocks that we need to keep on our radar.
Well, first up, let's talk about Eicher Motors. The company did come out with its earnings and seems like an inline set for the company in the Q1 of FY26. And look at the margins exactly in line to our estimate as well. 23.9% is what the company has recorded. If we look at the internals and especially the commentary with respect to the FY26 outlook, that remains positive as the company is optimistic about the volume growth across the domestic as well as the export market as well. They believe that the new launches will help them achieve that. Some of the recently launched products, they are gaining ground in select geographies, and the company is positive that this will continue going ahead. For FY26, no major capex that has been planned as such. All the new announcements, or rather the fresh investments, will be on the EV side, and along with that the company is also saying that the export market looks quite robust at this point in time. The other stock in focus, or rather the pack of counters in focus, will be the auto counter. The whole pack will be in focus today on the back of the July sales expectation data as well, because this time around we are expecting the two-wheelers and tractors to do very well for themselves, to be backed by good rural sentiment, good monsoon as well. But along with that, the passenger vehicle segment continues to languish behind. It's just M&M that is expected to show a good growth on a YY basis, while from the commercial vehicle segment on the back of a low base, we are seeing a bit of an uptick. We are expecting a bit of an uptick on a YY basis across the board. Now, other than that, even Tata Motors will be in focus as reports are suggesting that the JLR CEO has stepped down amid the Jaguar rebrand as well as tariff disruption. Do remember that Adrian Mardell was having almost more than 2 decades of partnership with Tata Motors, and it was indeed 2 to 3 years when he was holding the CEO position, but now he is stepping down, and that's the news flow we are gathering on Tata Motors.
Thanks, Srishti. A whole host of auto stocks to track today. But moving on, Sharad, which are the stocks on your list?
Slight negative news coming in for PNB Housing Finance as company's CEO and MD Girish Kousgi has given his resignation after a 3-year stint. Up next, the Swiggy weak set of numbers coming in, but interestingly, the company has maintained its guidance for contribution margin break-even, ranging between third quarter of FY26 to the first quarter of FY27. Looking at the numbers, the EBITDA loss has widened to almost 1,038 crore rupees, and even the net loss that has also widened to almost 1,197 crore rupees, signaling a weak quarter coming for Swiggy. Also, NCC, they have received orders worth 792 crore rupees in the month of July. And lastly, Godrej Properties with a slew of announcements in Tier 2 and Tier 3 areas. Another announcement coming is that they have announced their entry in Vadodara with the acquisition of roughly 34 acres of land, and the entire saleable area would be roughly 9 lakh square feet.
Right, thank you so much, Sharad, for joining us with all the stocks to watch out for. But let me come to you now, Ashesha. Tell us, what are the stocks that you have picked out for us for today?
Well, yes, first up, big boy Reliance Industries, because the date of AGM is now out. It will be conducted on the 29th of August. And remember, all eyes will be on some kind of announcement that comes in with respect to their green energy expansion plans, as well as the Geo IPO. So any kind of commentary around that will be crucial from Reliance Industries AGM this time. Let's also put the spotlight on Coal India. Then it reported in-line set of numbers. Margins though were better than what the street was working with. Now remember, we were working with a poll of 30% as far as EBITDA margins are concerned. It has come in at 34.9%. E-auction premiums stood at 50%, and Motilal Oswal has maintained its stance. They've maintained their buy stance, and they expect e-auction premiums to rise to 70% in the coming quarters. But largely in-line set of numbers is what Coal India has reported. After that, let's also put the spotlight on a whole host of sugar stocks that will be in focus, and this is on the back of some important commentary that ISMA has come out with, where they are saying that output is likely to rise by about 18% in sugar season 24-25. Apart from that, they've also spoken about ethanol prices. Now remember, for some categories it has remained unchanged for the last several months, and now they are urging the government to increase ethanol prices going forward. So some important commentary that has come in from ISMA with respect to production, ethanol prices, and the fact that US is now likely to export sugar to India, and that could perhaps be detrimental for Indian sugar stocks. So all these three stocks in focus on the back of their news pieces.
All right, so RIL, Coal India, and all those sugar stocks in focus on the back of that news flow. Thank you so much, Ashesha. In fact, thanks Srishti, Sharad, and Ashesha for joining us today and taking us through all the stocks that are going to be in focus in today's trading session. But on that note, we'll take a very short break. Be right back with more on the other side.
The September deadline ended, which is today. We last night had an announcement of an additional tariff on trans-shipped goods of a good 40% and 10% on the countries that were not included, and that has really spooked the markets, and the signs are beginning to show now in the market as well. We did see the trade fear coming in on Wall Street. We saw the markets end the day lower. Also, S&P, as far as S&P ASX 200 is concerned, that's down more than 0.5%. 0.6% cut coming in on the Australia Stock Exchange. We do see a Nikkei also that is down 0.4%. Kospi is down almost 3% in trade today. A sharp knock coming in on Kospi index today. Hang Seng, however, Chinese markets have turned very flat. Albeit very, very minor. It is trading in the green. Hang Seng is trading up 0.1%, and Shanghai is trading very flat, 0.03% uptick is what it's seeing. But largely, it's a day of declines coming in, and it's an implied start of cuts of almost 0.6% or 150-point cuts coming in on Nifty as well.
All right, so a 150-point downtick is what we are penciling in for the Indian markets as of now. But apart from that, lots of cues also to watch out for in today's trading session. Let's go to Snehi to get us a roundup of all that.
Well, yes, lots of cues to watch out for. It's the first of the month, which means it's time for the monthly auto sales data, so watch out for that back home. Other than that, you also have HSBC manufacturing PMI numbers that are going to be out as well. But in terms of the manufacturing PMI, it's not only our market back home that's going to be reporting it. You have the same metric and their own versions coming in from US, UK, Eurozone, China and Japan. So all major economies are going to be reporting their versions of the manufacturing PMI numbers. But other than that, from the US, you have the ISM manufacturing number as well. From UK trade data, from Eurozone, the very important inflation metric CPI numbers will be out as well. And from Japan, along with PMI, of course, you have unemployment data as well. In terms of global earnings, all eyes are going to be on Exxon as well as Chevron. And back home, in terms of Q1 earnings, from the Nifty pack, you have ITC that will be coming out with its numbers. But from the broader end of the market, a whole host of companies like GSK Pharma, Godrej Properties, MCX, Tata Power, Adani Power, Tube Investment, LIC Housing, Glenmark Life and Delivery are going to be coming out with their numbers. So watch out for how all of these stocks react. In terms of corporate action and board meetings, keep a close on Adani Power and MCX, because along with their earnings, the boards are also going to be mulling a stock split. So watch out for similar announcements here. And in terms of stocks trading ex-dividend, that list is quite long to with names like United Spirits, PNB Housing, LT Foods, REC, Marico, Maruti Suzuki, Bata, Varun Beverages, and that list goes on and on. So watch out for all of these cues, all of them very important to watch out for. Lastly, also keep a close eye on AGMs. You have names like Godrej Properties, Union Bank and Tube Investment that will be conducting their AGMs as well. So watch out for all of these stocks and cues very closely.
All right, so these are the key cues that you need to watch out before the start of D Street. But it is the beginning of August, and the beginning of every month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund income...
going to push from your side in terms of the ethanol export. How the industry is looking into this aspect? Will it be a positive one for the Indian government side, or how you are understanding?
See, Honorable Prime Minister, when he started this program in earnestness about a decade ago, has always maintained that the farmer will become the Annadata ke saath saath Urja Data bhi farmer hoga. This ethanol program has fundamentally been for the domestic farmers. We are ultimately the converters. Anything which disturbs this balance because of any unviable or different kind of subsidies and GMO kind of crops which these countries produce and disturbs will ultimately have a cascading effect to the domestic rural economy. Okay. Because the basis of the ethanol program has been the Urja Data, converting our Annadata to Urja Data.
And well, the central government's fiscal deficit has now stands at 17.9% of the full year target at the end of June, according to data released by the Controller General of Accounts. In absolute terms, the fiscal deficit, or gap between the government's expenditure and revenue, was to 2,80,732 crore rupees in the April-June period of 2025-26 fiscal year. The Centre estimates that the fiscal deficit during 2025-26 at 4.4% of the GDP, or 15.69 lakh crore rupees.
All right, so let's move on and get you some more news stories then. Prime Minister Narendra Modi will visit Varanasi on August 2nd. During the visit, he will lay the foundation stone and inaugurate several development projects worth around 2,200 crore rupees that are aimed at boosting infrastructure and public amenities in his parliamentary constituency. All right, next up, Kolkata-based Garden Shipbuilders and Engineers has delivered Himgiri, which is an advanced guided missile frigate, to the Indian Navy. Now, Himgiri is the first of the 3 frigates being built, marking a significant milestone in India's naval capabilities.
Oil marketing companies have reduced the price of 19 kilos of commercial LPG gas cylinders by 33.5 rupees effective from today. In New Delhi, the new retail price will be 1,631 rupees. However, there is no change in the price of 14.2 kgs domestic LPG cylinders. And And July 2025 witnessed the best average AQI and the highest number of satisfactory air days in Delhi since 2018. Remarkably, there wasn't a single day in the severe AQI category during the entire January-July 2025 period, indicating a significant improvement in the capital's air quality.
All right, on to some global stories then. U.S. Treasury Secretary Scott Bessent says that Washington and Beijing are inching closer to a trade pact with just days left before a key tariff deadline. Now, during an interview, Bessent said, and I quote, "We have the makings of a deal," end quote. But he also added that a few technical issues remain on China's end. Now, talks in Stockholm were described as tough, and Bessent clarified that he hasn't yet briefed President Trump. Now, his personal approval is needed to finalize any agreement. Now, details of the potential deal remain under wraps for now. Next up, Japan's jobless rate stayed steady at 2.5% for the fourth month in a row, even as factory activity slipped. The manufacturing PMI for July was revised slightly up to 48.9, which is still below that 50 mark, signaling contraction. Weak demand, U.S. tariff concerns and falling new orders weighed on sentiment, though hiring improved and inflation pressures eased. Meanwhile, South Korea's manufacturing slump deepened. July PMI fell to 48 as output and orders shrank. However, exports surged 5.9% on a year-on-year basis, which is the fastest pace in 7 months, thanks to the booming semiconductor sales. The trade surplus beat expectations at $6.61 billion, despite a dip in China-bound shipments.
And Apple just posted its strongest quarterly growth since December 2021, with overall revenue up 10% and iPhone sales jumping 13% to nearly $45 billion. CEO Tim Cook credited strong iPhone 16 demand, especially amongst the upgraders, and even pointed to pre-tariff buying for part of the boost. Mac sales rose nearly 15%, while the service segment climbed 13%. China sales also bounced back, helped by device subsidies. Cook says Apple will significantly grow AI investments and is open to M&A to accelerate its AI roadmap. Amazon Web Services clocked almost $31 billion in Q2 revenue and 18% year-on-year rise that narrowly beat Wall Street expectations. AWS remains Amazon's biggest profit engine, ranking in over $10 billion in operating income. AWS landed new clients like PepsiCo and plans a data center in Chile by 2027. And Reddit shares surged as much as 20% after the company smashed second record expectations. Revenue soared 78% on a year-on-year basis. That's the biggest beat since going public. And Q3 guidance also topped Wall Street estimates. CEO Steve Huffman spotlighted its AI-powered search tool as the key driver.
All right, so those are all the global stories that we're tracking this morning. But on that note, we'll slip into a very short break. More discussions on the earnings are back home on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to
where they have raised their target price to from 5,800 rupees to 5,850 rupees now, maintaining their ad rating. They're saying that the Royal Enfield strategy of focusing on absolute EBITDA growth continues to play out. The management plans to continue the strategy reflected in their estimates of higher revenue but muted EBITDA growth. They expect the EBITDA per vehicle to rise to 49,000 per vehicle by FY27 estimates, aided by aggressive marketing strategy, of course, and the margins are likely to stabilize at 25.5% by FY27 estimates. Along with that, we also have a report coming in from Nuvama, wherein they have raised the target price from 6,200 rupees to 6,400 rupees now, maintaining a buy. It was an inline set. The volume is uptrend continues, and they actually like the volume momentum that is expected to continue in the times ahead, and they are building an 11% growth in their revenue as well as earnings between FY25 and 28 as well, while trimming their EPS estimate by 2%. So that's about the Eicher Motors earnings and brokerage reports.
All right, Shrishti, stay with us because after Eicher, we also have another auto counter, that's Maruti Suzuki, that's posted an inline set of Q1 numbers, where the higher promotion costs and the new plant-related expenses have impacted the margins. Take us through the roundup of or the fine print of what the earnings really look like.
promotional cost did impact the earnings for Maruti Suzuki, as well as the margin profile specifically, and the higher raw material cost as well. But barring all of that, the margins were actually in line to what the poll was suggesting. 10.3% is what the company has reported in terms of the margins, but operationally there's been a slight uptick versus our estimates as well. Now, when it comes to the brokerages, then there too we have seen Nuvama going ahead and raising their target price from 13,400 rupees to 14,300 rupees, where they say that the outlook remained positive. Along with that, they retain buy based on that 27 times is what they are valuing the company in terms of their EPS estimates. Along with that, we also have Avendus, where they have also maintain an ad rating on this counter and raise the target price to 13,350 rupees. What Avendus is saying that the UVs are projected to account to 41% of their domestic volumes in FY27 is the favorable operating leverage that is expected as the newly commissioned facilities were ramped up, and they expect the export growth outlook to continue for Suzuki as the company maintains the export outlook and plans to go big when it comes to their overseas expansion.
All right, Srishti, well, a very busy day coming for you. Eicher and Maruti both, let's see how the market reacts to their results. But it's also that time of the month again when auto dispatch data will start trickling in. And once again, it is expected to be a mixed bag. As two-wheeler sales remain healthy on the back of exports, but PVs could continue to be muted amid lower inquiries and delays in conversions. What are you expecting? What is the poll looking like?
Well, it's expected to be a mixed bag for the auto sector for the month of July. The key outperformers could be the tractor and the two-wheeler segment to be backed by a positive rural sentiment, while for commercial vehicle segment, we are expecting that because on the low base, we can see the companies posting a positive number on the YOY basis. While for passenger vehicle companies, the subdued environment continues and the demand outlook is not that great as well. But when it comes to the numbers, let's talk about that. When it comes to Tata Motors, they're once again we are expecting an 11% decline on their overall volumes, while an 8% uptick is what we are expecting on a month-on-month basis. While for M&M Automotive Division, a 16% jump is what we are expecting on a YOY sales when it comes to their automotive sales. Along with that, when it comes to CV numbers, then there too, the key outperformer could be Eicher Motors VECV, wherein an 8% jump on a YOY basis is what we are expecting, while for Ashok Leyland as well as Tata Motors CV, just a 3 to 4% growth is what we are penciling in. Now let's talk about the two-wheeler pack, because there we can expect a double-digit growth for across the companies barring Bajaj Auto. There the expectation is a bit muted, but the double-digit growth could actually be backed by the good export data when it comes to select counters, be it Eicher Motors or TVS Motors as well. And lastly, from the tractor division, let's have a look at the YOY numbers, because month on month the seasonality might kick in, and on a YOY basis, M&M Tractors is expected to do good with units over 30,000 of units is what we are expecting, while from Escort 7,200 is what our poll is suggesting. Back to you.
All right, thank you so much, Srishti, for joining us with that. But with that, it's a wrap on this edition of Market Cafe. Kanishka and I will take your leave. Don't go anywhere, because the market will take all the market action forward. Stay tuned.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.